जीतेगा भाई जीतेगा भारत
जीतेगा
जीतेगा भाई जीतेगा
भारत जीतेगा।
Well, we've made it to the semi-finals, shall we say that? Yeah, we've made it to the semi-finals. Now all roads lead to Ahmedabad for the big grand finale. We are yet to see who plays against us, but hopefully we should make it. And just in case you didn't watch what transpired last evening, pure magic, and India posted a massive 397 for 4 in 50 overs in the first semi-final of the World Cup Cricket 2023. Earlier, India won the toss versus New Zealand and opted to bat first in what will be a repeat of the 2019 World Cup semi-final. It was Mohammad Shami who took 7 wickets and brought home the win by good 70 runs.
And Anisha, you were there. What was the atmosphere like? Must have been buzzing and energetic as ever.
It was crazy. That's the only word for it. The vibe, the entire, I mean, the stadium was like one soul. I was just, and those wicket hauls from Shami, that was the one that was really the clincher. That 2
Some
wickets in one.
nerve-wracking moments.
Yeah, between the 20th and the 40th over, there were moments you thought, oh my God, there is a possibility. But no, thankfully it didn't happen.
It was quite the clencher till last minute. I mean, once Shami was in form, you knew that, you know, the cup is getting closer to us. But it was also, that magical moment, King Kohli. That was his show as well yesterday. The whole nation was rooting for the King during the semi-final. The legend has scored his 50th ODI century, surpassing the god of cricket, Sachin Tendulkar. And I think what was the most touching moment was that he took off his helmet, he took off his gloves and he bowed down to Sachin Tendulkar, and who also passed his chair all across to him. And the whole stadium was chanting King Kohli. So many times actually.
Yeah, I mean, he's a complete rock star on the pitch, right?
Totally.
He gets that kind of attention and he deserves it all the more. So definitely kudos to the entire team, of course. But I think the standout performances, Shreyas Iyer as well. And of course, Jadeja finally taking that wicket and that catch. So amazing moments.
Yeah. Book your tickets for Sunday. Try.
Fingers crossed.
Yep.
But we won't make it for the show next morning.
I know.
We go for the finals, that's for sure. But I guess it all came to a stall yesterday. Not quite for the markets though. It's been pretty upbeat. As was the case yesterday. We're now at that 19,700 print for the Nifty futures, and even overnight there's been quite a bit of build-up on Wall Street. So a strong rally, encouraging US inflation data. The Dow's managed to rise for a 4th consecutive session, and more importantly, I think the correlation with the 10-year yield, the fact that it's now holding around that 4.5% mark, a good 0.5% ease off from those peak levels, that really has been aiding the global market rally. And along with that, what could one ask for? Oil prices, they've tumbled another 1.5%.
Yeah, I think overall the inventory data was quite solid coming in from the US markets, and that's the reason the crude prices have tumbled. More importantly, it's the inflation. So after that, data coming in terms of CPI, there was the purchaser price index, or the PPI, which is more closely followed by the Fed. That came out and that was a decline of 0.5%, and that is what really cheered the market when it comes to the global arena as well. But having said that, of course, the cues from Dalal Street also look impressive, and I think the biggest headline overnight is the fact that FIIs have finally managed to snap their selling streak. It was a small 550 crore buy figure, but after 15 days on the trot of them selling, of course, there was buying that return. DIIs, they have been buying all along. We have seen the DIIs have bought for 22nd consecutive session, and that's the longest streak that we have seen since July of last year. So the DII buying has been very resilient, but it's all about FIs coming back. As a result of all of that momentum that we saw yesterday, you have it on the screen, what important markers were broken. Nifty is above the 50 and 100-day moving average, almost at a month's high. The mid-cap and small-cap continue to be at a record high as well. The real estate pack is at 15-year high. We should probably change that color to green as well, because that's also a positive cue coming in. And of course, IT also, given the rub-off impact that we saw from Nasdaq, managed to end with a gain of almost 2.5%. So even if you look at the F&O market, seems like there were fresh longs on the Nifty. Bank Nifty, there was some short covering as well. So a lot of data points to watch out for, and all point to a positive outcome, at least for now, because we have broken out of that range.
Absolutely. So, yep, 2-month high, record high. Those are the kind of data points that are flying around, given the fact that it's been a pretty healthy winning streak for our own markets. And like you said, yep, the fact that it's been relentless FII selling that has finally taken a pause, that too is going to be a positive. Though remember, DIIs have been supporting the markets through and through, the longest DII buying streak that we've seen since the month of July 2022. So clearly, you have the domestic institutional investors supporting our markets. But that aside, there are other things that we will be keeping on our radar. The fact that IT major TCS as well is in the spotlight. They fixed the date for their 17,000 crore rupee buyback plan. That's the 25th of November. Remember, they had announced previously that there would be a buyback, and finally the details have emerged with respect to that. And you had the stock price as well, which has seen a pretty smart reaction. And just, you know, going back as well, Anisha, to the buyback history as well. How does that place this buyback?
The amount was a bit of a disappointment when it got announced at around 17,000 odd crores, but the company has been keeping it at a premium of around 15 to 20%, so that's what happened last time as well. But now if you look at how the stock prices are stacked up, there's almost a 22 to 20% premium coming in from the current market price. The record date, as you mentioned, is November 25th, but the retail acceptance might be low because there usually is a lot of participation that comes in on account of such buybacks, and if the participation rate is higher, then your gains become lower. So there you have it. The retail acceptance has been 100% for the last 2 to 3 buybacks as well. Of course, last time it was just around 23.7% and the gains were there. But this time as well, we have done the analysis that in case there's a lot of participation, the gains for retail participants could actually be limited to just 5.5%. So let's see what happens. But given the kind of scenario the overall IT basket is in, there might be higher participation in the buyback, because as a lot of brokerages have been talking about, the upside seems to be capped, and that's why this 20% gain which is there to be made on account of the buyback might look very lucrative to the investors as well.
Oh yeah, that's going to be another stock to look out for. But you know, lots of other talking points. But first, let's get you some stock ideas, considering that FIIs as well are charged up and they're back in the market. A minuscule buy, but a buy nonetheless. So could this be really that big turning point? Who knows? But here are some stock ideas that you could work with.
Mega bull market going on in steel, in the oil and gas space in US, in Saudi where they are present, and in India. In water, because of the Har Ghar Jal, there's pipes going on there. They've acquired Syntex. They will do plastic pipes also to get into your home along with the tanks. So as you say, the degrees of freedom expand, and if you're conscious on capital allocation and ROI, there's no reason why you can't be showing 20-25% return on equity on a levered basis, on a expanding opportunity set. Virat Kohli, very easy, it is HDFC Bank. The Zomatos and others are in a duopoly, and it's for them to lose this game now.
I made one investment. It's an unlisted company called Wari. Okay. We made a significant investment 1 year back. I think this is a interesting company to watch. They are already bagged significant orders in the last, right now again, last 2-3 months, some panel prices are up, down, but we are not taking that view. I think this is a real long term. This company should be interesting to watch for. I've owned Dalmia Bharat for now almost 5 years. So these are all, I own Gujarat Fluoro for 5 years.
My Indian portfolio, we've entered our 3rd year of a property upturn. Clearly, this particular bank is a much big. There's been a significant derating relative to history, right? The Zomato market cap is way lower than the nearest equivalent in China, which is Meituan.
All right, that's the market opinion, but let's connect then with our chartist to find out what the view is on the index. We've got Kunal Bothra as well as Naresh Mirani joining in as always. And guys, what a stellar cricket match. Kunal, you must have been glued to your screens cheering us on.
Absolutely. The first half, I think, was
Nerve-wracking.
terrific. I mean, the batting,
Yeah.
it was a dream kind of a batting performance from India.
Yep. Okay, and I guess dream run for our markets as well, because we're looking at pretty stellar levels on the frontline index. Kunal, where to from here?
Well, yeah. So I think when we look at the last 1 month of market movement, from 90,600, 700, when the corrective wave started off, to a point when the index came towards 18,800 mark. When we look at the kind of chart patterns which have been shaping up on the sector front as well, it's indicative that the weakness which was there in the banking index, I think that's getting at least behind us, because yesterday what happened is both the indices, the Nifty as well as Bank Nifty, for the first time I think have closed back above their respective 50-day moving averages. I think for the Bank Nifty specifically, it's almost like after a couple of months that we've seen the index coming back above the 50 DMA. This, I believe, could be a strong indication that a near-term breakout has been confirmed for both the indices. And I think we've managed to break past about the 90,500 mark, which was again a psychological resistance for the Nifty. So I think on many fronts, on sectors, on as well as market breadth, etc., I think this is a vibrant market, and it's indicative that there's more to come, at least over the very near term.
Right. Naresh, hi, morning. What's the take on the markets? The FIIs have made a comeback. What could it spell out for the index?
So finally, we are seeing some bit of a recovery from the FII selling. And if this happens, it makes it better for the whole banking space to start coming into reckoning. And we started seeing the first price action in, say, at least a Kotak Bank or a HDFC Bank. But we are starting to see new leadership in the banking space. We've started seeing Axis Bank come closer to 52-week highs. You have IndusInd Bank closer to it. There is a Federal Bank. And the smaller banking names also doing well. NBFCs are taking leadership. So whether it is housing finance or say microfinance, we are seeing trends across the board. So overall financials as a pack should be on radar, given the change in terms of flows. The market continues to remain in a strong trend. It is just the heavyweights which are not doing well. But if we look at the rest of the indices, we've hit new all-time highs on mid-cap, small-cap indices, and almost very close to it on Nifty 50 equal weight or a Nifty 500, also just 1% away from an all-time high. So it keeps getting broader. The market's broader ways has been doing well. Now we need to watch out for whether heavies can take some leadership from you.
Okay, let's talk stocks then. Kunal, what's on your list?
So I'll bet on two large cap names. From the metal pack, it's Tata Steel, which I would be bullish on. The stock yesterday gave a breakout about 122 plus mark on the spot level. So would suggest a buy with 133 as a target, and stop loss could be kept at 120. And Reliance Industries also made a very strong comeback. In fact, the stock has formed an inverted head and shoulder pattern over the last 1 month of price patterns for the stock. So be bullish on the stock with a target of 24.30, stop loss at 23.20.
Naresh, what about your stock strategies?
So first is the buy on Container Corporation of India, Concor. The stock has yesterday given a breakout out of a range. The stock has consolidated sideways for a long period of time, and the only underperforming public sector enterprise left. So a breakout yesterday, good close, expecting this to see follow up at least towards 800, stop loss at 738. Second is a buy on Hero MotoCorp. The stock has been consolidating around the 3,000, 3,200, 250 mark for the longest time. The whole auto pack has given a breakout. The next one, which could actually give a big breakout, is Hero MotoCorp. Yesterday showed some signs of promise in the last 1 hour, 1.5 hour trade. Once it sustains 3,200, that would be an extreme short-term breakout. So preempting that breakout with current levels as a good risk-reward area. Stop loss at 3,100, target price of 3,500.
All right, there you have it. All of your top technical recommendations. Hope you took note. But let's get a move on then and focus in on individual stocks that will be in the news today and tracked closely. Samit joins us in the studios to discuss just that. 2 stocks that we'll be discussing. Let's begin then with Tata Tech. All the details with respect to the IPO.
Well, yes, the price band is the most important detail that was not yet out and which has come out. Around 475 to 500 is the price band. Now, in October, they had done a stake sale transfer that Tata Motors had sold their stake to TPG, and that was done at a valuation of close to 401 rupees per share. So, this is at a premium of nearly 25%. Now, the IPO size is around 3,000 odd crore rupees, and the market capitalization of Tata Tech at the upper end of the price band would be close to 20,300 crore rupees. And how the valuations would stack up, that is the FY24 valuations what we are talking about. Tata Tech valuations on FY24 basis would be around 29 times, which is the most cheapest. In fact, Tata Elxsi is trading at around 63 times. This is one third valuation of what in fact half the valuation of what Tata Elxsi is trading at. KPIT is trading at around 67 times, and L&T Tech is trading at around 36.1 times. So the cheapest ER&D IPO is coming on board November 22nd. It's starting. It will be open till 24th. The company is looking to raise close to 3,000 crore rupees, and the valuation is around 29 times.
Oh, well, yes, and of course we have seen there has been a lot of interest around these niche, IT companies which are servicing to the ER&D segment, especially the automotive and aerospace, and that's what the distinction factor is for Tata Tech, that they have exposure to aerospace as well, because if you look at Tata Elxsi, they were largely in automotive and body engineering, and Cyient had a lot of exposure to aerospace. But now you have Tata Tech, which is providing end-to-end services, right from software testing to design and manufacture engineering to, of course, the entire depiction in terms of how aerospace and automotive industry is actually growing. In terms of the segments, of course, it has the largest revenue coming in from automotive, which is 75% of the contribution. Almost 40% of total revenue comes from the anchor clients, which are Tata Motors itself. So that remains the anchor for Tata Tech. And of course, in terms of geography as well, North America is almost 21%, while Vietnam also forms 22% because they have one of the major clients working in that geography. So there's a lot of USP actually, and a lot of interest, given this is the first IPO coming in from the Tata stable in almost 2 decades.
Yeah, absolutely. 18 years. The street is going to be keenly looking out for this one. The other one, of course, Bajaj Finance, and we have Rahul Malani as well joining in. We'll come to him in just a second. But before that, Soumya, just highlight, the fact that the central bank has now ordered Bajaj Finance to stop lending by e-com, Insta EMI card. Why the move, and what could be the impact? What a brokerage is saying.
Well, if you see on the brokerages front, in fact, the company has clearly said that this issue could last for nearly 60 days, and that is what the brokerages are expecting. Around 1 quarter, at least 1 or 2 quarters, this impact might be there of this ban. Now, what CLSA has clearly stated out that the impact on net profit would be around 6% On the AUM side, InCred believes that it could be in mid-single digits. So the impact is expected to be limited across all the brokerages. That is what the consensus view is. Max to max impact on PAT would be 6% On AUM growth, there could be some impact of around mid-single digit. And another one thing that is actually not too negative for Bajaj Finance is the fact that this ban has come in post the festive period buying, which has already been done. So the impact, again, because of this, would be limited going forward. That's what the consensus view is coming from the brokerages.
Okay, let's pick up on that point forward. We've got Rahul Malani as well joining in on the show. Rahul, hi, morning. Help us analyze that, now that Bajaj Finance has clarified that this is just a 60-day ban. Like my researcher was just highlighting, that it's coming post the festive season, so not much of a material damage. But how are you reading into this move?
So firstly, good morning. See, the exact impact on the disbursements would be difficult to quantify because the proportion of this, both the segment comes under sales finance and B2C finance, which the company declares in the overall segmental basis on AUM basis. But if we take the reference of the latest annual report, wherein company is stating that the EMI cards have enabled the company to finance digitally over 1 million purchases across the consumer electronics, digital products, lifestyle products, e-commerce and other retail spend. On also the customer acquisition accounts for around 10 to 15% in this segment. So the quantum would not be small, but however, as suggested, the festive season has already been concluded, so the impact would be limited in this quarter. And on the top of that, we believe that the issue is a temporary phenomena and would get resolved within a short period. Thus, it would be restricting the impact on the profitability and growth. So if we are getting a major negative reaction today, so we are advising our clients to buy.
Right, and what do you think, Rahul, is going to be perhaps the next course of action from the Reserve Bank? Do you think that future actions will not be ruled out and thereby it could continue to have a negative rub-off?
See, point well taken. This could be a phenomena for overall for all the sector as of now.
In any sense, Rahul, what will happen to the growth rate? Because, of course, with Bajaj Finance, you have seen 30% kind of AUM growth on a compounded basis for many, many years. Do you think that will take a hit? And when you say it's a temporary phenomenon, would you be okay if it's a 6-9 month phenomenon, or you're expecting it to be even lesser?
We believe that this phenomena would be and this ban would be lifted by the end of this quarter, or most probably by the fourth quarter.
Great to have you on the show. Thanks so much for joining in today. Well, the word coming in from the house of Chokhani is that if there is a dip, recommend buying into that. We'll take a very quick break on that note. When we come back, we'll have our researchers join in and talk about all the stocks which are going to be in focus this morning.
We have our research team joining in to talk to us about the stocks which will be in focus today, starting with Sharad, because he's standing by to talk to us what the channel checks are suggesting. DAM Capital has written a note on the building material space. Let's go across to him to find out more. Hi Sharad, good morning.
Well, yes, looking at the building material channel check as per DAM Capital, the mixed set of trends are coming in, and of course we are looking at infra upcycle as well as the real estate upcycle coming in. But if you look at the details, the mixed trends are coming in. Pipe segment, of course, restocking is happening in the PVC segment, and however there is a price stability which is kicking in, and because of that the demand remains decent. Apart from the CPVC segment, another variant of the PVC segment, to put it in a simple words, the recovery is continuing to still being slow. While the projects has been a key demand driver, but the retail demand, that has actually not picked it up, and it's relatively quiet. Also, the irrigation pipe segment, if you look at it, it could be the sales could be coming in near the near term as well. Moving on from pipes, now we go to the wooden panels, and of course the plywood segment, they are still seeing pain happening, and of course the transition coming into the premium segment, that is still expected to be delayed. If you look at the MDF portion, the laminates, both the segments, the healthy demand is there, but in the laminate segment, if you look at it, the pricing competition and entry of smaller players have actually become a deterrent as well for the larger players. Lastly, the tiles and the bathware segment, over here also we are seeing divergent trends coming in. The domestic demand has actually been overall weak in the pre-festive period, and also there is a tussle in the market share, especially in the micro markets. Also, the recovery overall is expected to happen over the next 6 to 12 odd months, and the channel is actually hopeful when it comes to the real estate led recovery, and given several key projects are there in the key markets, especially in the top 8 cities.
Thanks very much for those details, Sharad. Moving right on, Star Health conducted their management meet, and as per Nuvama, the company might take an additional price hike for 10 to 12% of their portfolio. Let's get in all the other key takeaways as well. We've got Lisa here who's joining in. Lisa?
Right, so Nuvama met up with Star Health, and the management has shared the outlook on the hikes going forward. So they said that there has been an average hike of around 20% across the industry, and this additional price hike that may come in for 10 to 12% of Star's health portfolio. Well, they also spoke about their loss ratio, because given the impact of the price hikes, which is yet to play out, the loss ratio that may come off as the year progresses, because their loss ratio has been high owing to dengue as well as other seasonal reasons. And also they mentioned that the early trends indicate that new hospital admissions are reducing, and if the composite license becomes a reality, then it may target the term life as well as ULIP business going forward. But for now they don't have any plans to enter the motor as well as the property segment. So that's the outlook coming in from the management of Star Health by Nuvama, shared by Nuvama, and Star Health will be in focus on the back of this.
Thanks very much for giving us those details. So we'll be watching out for Star Health in today's trade basis, those key management takeaways. Meantime, the government has launched the 8th round of commercial coal mining auctions. And speaking to ET Now, the Coal Secretary Amritlal Meena said that the share of commercial coal in the overall production can hit 15% by the year 2030. Let's listen into that conversation.
In this 8th round of auction, which have been launched today, total 39 coal blocks have been put to auction. 35 are being put to auction for the first time, and 4 coal blocks are the one which were offered earlier, but there were either no bidder or single bidder, so been put to auction again.
Okay, in last 7 auction round, how many coal blocks are completely operational as of now?
See, out of total 7 rounds, 91 coal blocks have been successfully auctioned. And out of 91 coal blocks, 5 coal blocks are into commercial production, producing around 8 million ton of the coal. This year, another 4 coal blocks will come into production. And the share of coal being produced from captive and commercial both segments taken together, last year it was 116 million ton out of a total production of 892 million ton, which is about 14%. This year, the share of captive and commercial is likely to go up to about 15%.
Are you also providing some new, relief, relaxation, or some new reforms, sort of reforms kind of measures you are taking in order to attract more investment during 8th round of commercial coal mining?
As mentioned by Honorable Minister during his speech, already government has taken many policy measures to attract investment into the coal mining.
Coal production target have been revised. It has been increased to 1400 million ton by 2027. Can you give us a rationale behind this? Because you are at this point of time you are producing around 1 billion ton coal, which is the target for 2023. So why the government has revised the target?
No, government has not revised. These are the projected requirement of the coal and our production plans, because every year there is increased demand of power, there is increased demand from other sectors. So 1400 plus would be our requirement.
Okay, so that's the latest verdict coming in from the Coal Secretary, but time now to welcome on board Sanjiv Bhasin as well to get a sense as to what's happening in the market and where are we headed. Mr. Bhasin, hi, thank you so much for making time and speaking with us. Let's begin by discussing TCS itself. The entire IT space is in a bit of a tumble. This entire buyback news and the record date is finally out in terms of November 25th. What would be your recommendation to retail investors? Do you think they should participate in the buyback, given it's at 20% premium to current market price?
Yeah, good morning, Anisha. So this is the 5th buyback by TCS, I think in the last 3 years, if I'm correct, or 4. And each time you've given it and not bought it back, you've lost out on the opportunity of, another for 50% upside. It started from 2,300 or 2,500 and it's gone to 4,500, which tells you that the company is extremely confident on the slightly longer term. So I would definitely recommend take use of this arbitrage, but don't let go of this blue chip. Because if we can see the underlying sea change, it is telling us that bond yields and inflation maybe past their peak, and if spending comes back, which is very much on the card, then IT will be again in a sweet spot. Plus, it's a good alibi to a weak rupee, and TCS is the greatest wealth creator of all time. So I still think participate in the buyback, but please buy back your shares, because you don't know when the next buyback comes, and if for small petty gains you lose out on a big blue chip. So stay invested and take use of this arbitrage.
Talking about blue chips, Mr. Bhasin, what should one do with Bajaj Finance? This news has come in as a bit of a shocker. But of course, the company has been delivering stellar returns both in terms of stock prices as well as earnings performance. This is a knee-jerk reaction we'll see today, and one should buy into it?
Surely, Anisha, if you see the underlying, if whatever I made out of the numbers, I think it's just 2% or 3% of the entire EMI loans or the cards which they have. Now, we'll get more clarity from the management over a period of time. But if I'm correct, then, they will be, it's how fast this KFC, recommendations can be implemented. That may take maybe 1 quarter. but I would definitely think that that will be very fastly adhered to by the company. See, the company has stood for two things. One is growth and being innovative, and second is quality of management, which is unprecedented. So this was really a shot in the blue, but I think a large part of that will have been addressed by the management. And given that this is an opportunity to get into the largest NBFC, I would definitely use this decline to add on to this stock.
Okay, that's the take coming in on Bajaj Finance. Use the declines to buy into the names. Also, let's address some of the buzzers from yesterday. MCX, of course, has been charting new territory almost on a daily basis. Yesterday was no different. Another 7% of a bump up coming in on this stock. There was Coforge, Oberoi Realty, Emphasis, Manappuram. They all held out quite smartly. Sanjiv, anything from mid-cap IT, some of these niche names, the brokerage is calling KPIT one amongst the best within the mid-cap IT arena. Clearly, large caps are not performing, but anything within the mid-cap end that you like?
So, Aisha, I have liked Persistence from 3,700 level. It's at 66 all-time new highs. I still think that company is a, must-have in your portfolio. It's been included in the MSCI indexes. Coforge is another stock which has no promoter holding, and that could be a dark horse. But we want to remain with three names: Persistent, HCL Tech, and Tech Mahindra. HCL Tech and Tech Mahindra on the large caps are giving you enough comfort on the valuation and the road forward. And I think these two stocks can be a far better player than any other name. In this whole IT underperformance, actually mid caps have been far more better performers if you just took the case of Persistent. So I think Coforge is one name which we would go with. But like I said, there is a plethora of other stocks or opportunities which you are getting. I mean, just the recent case is Bajaj Finance. One observation which has 3% impact on the overall revenues is going to cause some chaos, and that's the opportunity you must look to buy.
Entire microfinance space, because that has been reporting very strong numbers. There's this entire wave of new tech-based apps that we have seen, and these micro lenders are also tapping into the digital, data to kind of parse through their clients as well. Which names come to mind from the microfinancing arena?
So, like you said, AU Small Finance deserves a relook. It was trading below 700. I gave that as one of my Diwali picks at 670, 680. I think they are progressing very well on their digital apps. Then look at AV Capital. That's another NBFC which has progressed very, very smartly. And some of parts, it's got all the holding companies, and its digital app which they've recently launched is doing extremely well. If Anisha, you looked all around you after Bajaj Finance, you will find that AB Capital is making very much inroads into the small loan category and the MSME space. So that is one stock I would keep an eye out on. As a disclosure, this is another stock which we have in our portfolio from 120, and we think that this is a very, very big wealth creator over a period of time. Some of its holding companies and the new age business which they are into.
In fact, one of the brokerages is also highlighting that it's the auto ER&D space that they like within the tech universe. And clearly some of their preferred picks are Tata Elxsi, L&T Technologies, KPIT as well. They're saying that there has been a significant interest in auto tech, and these companies which actually service to the auto industries are the ones which they're currently liking. There's another interesting note coming in on IIFL as well, or rather from the house of IIFL, talking about how disbursements are going to get impacted. There's going to be limited in the restrictions. They're saying it's applicable only to the digital EMI cards. This, of course, pertains to Bajaj Finance. IIFL is saying if persists for long, may impact new customer addition. Although most of the experts that we've been speaking with are clearly saying that any dip in Bajaj Finance should actually be bought into. CLSA says that, this is more of an operational breach rather than a major violation of RBI's guidelines, probing upon the point as to why did the RBI curb them for the next 60-day period, saying that they believe that for Bajaj, it should be resolved within 1 or 2 quarters itself. But Kunal, on the charts, I mean, this is, of course, going to be a news flow-based impact on the stock. Where could it fall to?
Well, yeah, I think, but, after yesterday's correction, at a point when the markets were doing pretty well, the stock falling below that 7,200 to 20 odd mark. I think that was the close for Bajaj Finance yesterday. I would probably expect that there could be another at least 150 200 points correction, at least over the very near term, for the stock price. Now the concern which is actually emerging on the charts for Bajaj Finance is the proximity the stock is towards its long-term moving average. The last time the stock had broken below this 200 DMA was in November, or I think November second half 2022, when the stock was at 6,600, 700 levels. From there, the stock had fallen almost 1,000 points further in the next 2-3 months of price correction for itself. So the bigger concern for Bajaj Finance is not just that the yesterday's correction was more than 2.5%, but the proximity towards the 200 moving average, and in case if the stock breaks below this average, could probably lead to a serious correction to the stock price. So I would be a bit on the cautious side and would wait out for at least the next couple of days. In case if there is any kind of a breach as well as a confirmation of this long-term moving average, I believe that the near-term prospects could be quite grim for the stock.
Okay, so that's the take coming in on Bajaj Finance, so watch out for all of that. In the meantime, Naresh, I also wanted your take regarding a couple of these auto names. Of course, Tata Motors is going to be in focus because the last transaction that it did in October was close to around 410 rupees a piece on Tata Tech. Now the valuation of the IPO has come in at 475 to 500 rupees, so that itself is a big bump up. And yesterday we saw quite a bit of momentum on Eicher Motors as well, ended as one of the top gainers at the index level, over 4%.
Interesting. Tata Motors is setting up for a short-term breakout. It topped out around 675, 680 back in October. Then in November start, we made a top around closer to 665. Yesterday, we've closed around 670 odd levels. And back in July also, the stock topped out at around 665. So roughly 665 to 678 has been a resistance. The stock is coming close to that. A breakout above this actually gives an upside towards 750 in the short term. So looks promising at current levels, add on the way up above 680. Going into Eicher Motors, this is a stock which is, after doing a lot of flip-flops over the last 6 to 8 months, going back to 3,200, 3,500 multiple times. The stock has now come back to a new all-time high, very close to it, just a 0.5% away. And the stock is on from a longer-term basis from 2017, where it topped out at 3,300, has not done much. So it looks like a breakout in play. It's just that the stock has moved up from 3,300 odd levels just a couple of weeks back to 3,840. The risk reward is not great. But a fade off towards 3,700, 3,750 should be a buying opportunity. And the last one in the pack is Hero MotoCorp, which looks promising if it can sustain about 3,200.
Bunch of other stocks which are going to be in focus as well. We've been flagging off TCS as well as Bajaj Finance. There's Vedanta too, which has dispatched one of its first consignment of green aluminum. That's something that the news reports are indicating this morning. There's Dabur as well. The company has dismissed its defendants in the federal cases that they had ongoing in the US. There's RateGain, of course, that they're looking at a QIP as well. So that's another stock which is in focus. The floor price has been set at 676 thereabouts. So these are a bunch of stocks which are going to be in focus this morning. Besides, of course, TCS, Tata Motors, Bajaj Finance. There's also Star Health, wherein Nuvama has said that there could be additional price hikes which may actually come in for 10 to 12% of Star Health's portfolio. So that's something that they're marking out for as well. Sanjiv, anything within the insurance space that you like? I know, there are many hotter sectors in the market to bet on, but particularly this.
So, Aisha, you must see that there are 3 distribution channels. One is insurance, the other is AMC, the third is exchanges, and fourth is brokerages. And brokerage stocks have been through the roof. As a disclosure, we are also sitting on stock options in our company, and we think that that is the way forward, because these are conduits which are going to make money irrespective of where the markets are. Insurance is a no-brainer in the sense that private insurers are getting a very, very big chunk, and their AP is only rising over a period of time. So I think that 3 names, SBI Life, ICICI Pru, and HDFC Life, all these 3 in tandem could be very, very good wealth creators over a period of time. And I still think this distribution channel, particularly brokers, exchanges, insurance, and the AMCs, these are a very, very good long-term bet, given that the the conversion of financial savings into equity and other products is very much a long-term process.
Mr. Bhasin, before we let you go, word on the industrial space as well. Yesterday, we saw that knee-jerk reaction come in on the stock of Siemens on account of that entire demerger and listing prospect of one of its vertical, and the fact that the deal hasn't happened at a huge discount. It's 15% discount, which the street had made up its mind about already. What's your take within the capital goods space? Would you go for the likes of L&T, which also have a infrastructure theme to it, or ABB, Siemens, and manufacturing kind of names?
So we like two names. One is Cummins, the other is Bharat Forge, which you can, attribute to type of that. Third is Thermax. L&T is in our portfolio. We are not increasing weightage. We will try and participate in the buyback for whatever it is. But L&T is a core holding of our portfolio. These three names is something which we would bet on. Siemens, I would say, let this whole embroidery of the energy part getting split and so on get, demerged, whatever, that play out, because that would put some cap on the upside, since there are people who want to exit. But Cummins, Guidance, Thermax, Bharat Forge and L&T, these are four of the choicest names. You can add an ABB.
Always good to have you on the show. We'll let you go on that note. Have a good day. Let's just see and in fact get in some more stock ideas too. Here's what our fundamental experts Pankaj Murarka, Vinit Bulinshkar are making of the market temperament and of course stocks that they're liking.
Positive on Paytm as a company because I think Fintech is at the intersection of finance and technology. And my view, probably some of these Fintech companies will emerge as the fastest growing companies within the financial sector for this decade. So clearly, I like that. And now the companies turned profitable and probably they're going to have very strong growth over the next, let's say, 2 to 3 years. And I think valuations still are very reasonable. So in the context of the near-term growth over the next couple of years, and more importantly, the opportunities that lie for the company from a medium-term perspective, I think it becomes a very compelling bet for me.
So textiles is on a very sweet spot. Home textile is doing well. Margins are back. Okay, and the company is taking a very good measure to put a foray into the Indian towel market, which is a 50,000 crore market, and they've been very smart not to disturb the trade. Not going in with online sales where heavy discounting takes place. So I think the strategies are right, and the other verticals which are there, as in the flooring space, that is really taken off. We will see positive EBITDA margin flow coming in, and all these businesses are guiding quite nicely as we go out into the next 2-3 years. At 11 times earnings on FY26, I think it's a very, very good deal. And specifically the fact that it's a consumer play, I think it rings very well with the audience, and with lowering interest rates, I think this stock is about to fly. We are aggressive and we have a 218 target. We initiated at about 107 about a couple of months ago. Today we are at 150, so the stock is ticking quite nicely.
Let's also welcome on board then Chakri Lokapriya, who joins in on the show. And Chakri, all eyes now reined in on what happens on Sunday, but a clear stellar match that was played yesterday. What's your outlook then in light of, the cricket analogy as to what could likely hit a six or hit it out of the park when it comes to the stock markets in terms of an individual sector or even a stock?
Yeah, I just hope that the power sector continues to bat like how the Indian team has been doing so far. And it's probably going to go that way. If you look at, the number of companies joining that list, for example, another PSU, Neyveli Lignite Corporation, they have very large expansion plans in both the renewable and the non-renewable space and thermal and in mining. And now it's trades at about like one-time book value. And so it has phenomenal amount of growth ahead of it and therefore valuations inside. And this story can be repeated across a number of power names.
Quite interesting. Kunal, the charts, we've been tracking what PFC, REC, etc. have been doing. Any new names you think that could be added to the list?
Not really. I think from the PSUs, it's still PFC, REC, which are looking attractive. Torrent Power from the private sector names is also something which has popped up on the charts. Tata Power, I think at 260, the last I had seen yesterday or day before. I think that was a stock which is trying to make a comeback. It's still off from its previous highs of 290, 295. I think 2021-22. So for Tata Power, I think there's still some traction for the stock to try and scale past about the previous life high levels. But I believe that these are the few odd names which have done pretty well. Of course, one of the more formidable ones which have given a breakout in this last 6 months, 9 months of this calendar year is NTPC. I think that stock has done exceptionally well. With the kind of a beta nature of the stock price, the slow, steady movement which we've been habitual to seeing into the stock. But this has been a complete change here for stocks like NTPC. The stock moved from 200 to 220 and then 220 to 40 in a matter of, I think, few weeks itself. So I think that's another standout stock from the entire space. But I think as of now, it looks like PFC, RSC are the ones which would continue to ride onto the momentum on the upside, and maybe some sort of a breakout which you can expect for Tata Power.
Sure, point taken. Chakri, what about some of the consumption plays? And I'm talking about, let's say, Alcobev, for instance, or even textile retail, because the numbers from these companies have been quite strong. We were speaking with Nilesh as well from Envision. He's quite positive about this entire alco-beverage space. And of course, UK FTA, though it keeps getting delayed, could be one of the kickers as well, and other FTAs lined up as well.
Interesting patterns. There's, the luxury end clearly on the high end is clearly they're of course consuming in just about every single pocket. So that's very strong. So on the other hand, as you're coming down the chain, durable consumption is holding out very well. What I call durable consumption is, for instance, Titan. Now, this is something which holds its value, and therefore people are continuing to spend and buying two-wheelers. So that bit is holding exceptionally well. But if you look at the QSR space and you look at the retail space, retail apparel only except for maybe Trend and a couple of them where they have product differentiation are doing well. Otherwise, there is weakness and margin weakness.
What about Tata Tech, the IPO, with respect to all of the details now that have been set, the fact that the price band is set at 475 to 500 rupees per share? What is it that you're advising investors to do?
It's in a very interesting space, given that, both its engineering outsourcing services to companies, as well as in its technology division, pure technology division. Both of them are very relevant in today's space. They help the manufacturing industry, which is now going all digital. And so from that perspective, it's clearly a very interesting space, and therefore will get higher valuations. But this as a company, I don't think we will be investing right now, but clearly it looks a very strong company for the long term.
Okay, that's the take coming in on Tata Tech. Yesterday, of course, it was all about autos and technology. That's the one which actually bumped up in the markets yesterday, led, of course, by Eicher Motors. Tech-M held out very smartly. There was LTIM, Tata Motors, Wipro, Infosys. They were all charged up quite a fair bit. Chakri, there is a brokerage note this morning which is actually betting big on some of the tech plays which, help out with auto technology. But the large cap IT space, do you think that could be a contra bet? If the market were to move higher, you think they too will participate?
The large cap IT best, I guess some of those reports are now talking about, there's a certain shift in focus will be because certainly in the US, inflation has come down, and therefore there's an expectation that rate cuts will start sooner rather than later. Against that backdrop, they expect a demand revival, which is missing for the large cap IT. But I don't think that battle is over yet, because as far as the US is concerned, now they've just shifted out the pause from a December to a January. So I think it's still a wait and watch, because large cap IT valuations have not really corrected by that much. They're just kind of mirroring the slowdown in growth rates. So I'll still stay away from the large cap IT.
Autos though, because there's a distinct demarcation in what the passenger vehicle makers are doing to what's happening with the farm segment, and that CVs is in a different trajectory altogether.
The auto sector, yes, clearly we've seen passenger vehicles as well as two-wheelers have done very well. There's been some amount of revival in the farm sector, but that's more again company-specific. Companies like Escorts are doing very well. That's because not just farm, but farm-related equipment is also coming in. Expectations of that is what is holding up the stock. Now, as far as two-wheelers, I think this is part of the consumer durable spend, as what we call it, is holding up. And I think that trend will continue to remain strong going into the next quarter.
Since we're talking about mid-cap IT earlier, Kunal, your take on the kind of moves we saw yesterday on Emphasis, a Coforge, a InfoEdge, all of these stocks were suddenly up 3 to 5%. No other reason except the Nasdaq move. Do you think this could be a sustained uptrend?
Yeah, I think for the mid-cap IT names, it should be a sustained uptrend. So, we did a relative price performance analysis between the large cap IT names and the mid cap IT names. And just to give you an example, the large cap IT stocks, for example, TCS, Infosys, etc., they are still reeling at their 200 moving averages, maybe with a margin of 0.5%, 1%, plus minus those 200 DMA for themselves. But then when you try and compare this with the other mid cap IT names, these stocks are significantly above their long-term moving averages. Yes, these stocks have also corrected, I think Persistent, etc. They've corrected from their 2-month, 3-month swing highs. But then when you look at this comparatively with the larger cap IT names, these stocks have done exceptionally well in that kind of a time span. And also when you look at it from the September 2022 lows, where TCS, etc. was, I think, at 3,000 levels, Infosys was almost at 1,200, 1,300 mark. I think from there on also, I think these mid-cap IT names have done exceptionally well. So there is a definite tilt as well as a high beta nature, more positive, more on the positive side towards these mid-cap IT names. And I think that's one of the standout features for these stocks. I would probably believe that if one is betting on the IT pack as such, then you'll have to have a composition of almost 50% to 60% tilted towards the mid-cap IT names.
Right. From technology, let's move back to consumption and the luxury demand trends. They are on a steady rise in the country. Which are the sectors which are benefiting from this trend? Vinny is here with all that analysis. Vinny?
Good morning, and absolutely luxury is the trend that has been going on for a while now amongst consumers, and that's not only because not only tier 2 cities, tier 1 cities or metro cities, but also smaller towns that are joining into the premiumization trend now as well. The share of household income overall, there's a rise in the household income as well that is benefiting the premiumization trend. Other than that, in terms of when you look at it specifically for wines also, people are moving more towards premium as well as elite wines as well. Other than that, overall consumer appetite is increasing across geographies to move towards premium products as well. And some of the companies that would benefit from that would be something like a Titan, USL, Eicher Motors, Tata Motors, Havells, Nykaa are some of these trends that companies that benefit from this premiumization trend as well. Now, according to the Macquarie report that we are highlighting right now, there's a rise in specifically the 100% grape wines, the share in 100% grape wines. That's more of the premium wines. Where you look at it, that clearly there's an indication that premium as well as the elite wine over there has seen an increase over the years as well. Now, comparing over the years, we're comparing from 2014, 2019 as well as 2022, clear increase that has come in the premiumization trend. And especially the pricing product is normally for premium and elite is like 700 to 950 and 950 and above. That's seen an increase coming in, where in 2022 the premium share is at 45% versus at 2014, which was at 41% for premium products, and elite was around 12% for elite wines in 2014, while 2022 it was 17% as well. Similar trends that are working out for the IMFL industry as well, where premiumization is taking a higher stake now and occupying the higher chunk in the market as well. For premium products, it's moved from 2015, it was somewhere around 16%, and now it's moved up to around 21% for premium. And luxury IMFL industry products also are doing well. From 9%, it's moved up to 10% currently. And luxury products normally account to more than 2,000 rupees in the IMFL industry. So let's keep an eye out on this industry as well. Footwear too, strong growth that we're seeing there as well. In 2015, premium products were only 6%, now it's 7%. Mid-premium products were around 9%, now it's 11%. So it's across boards because similar trends that we've seen coming in the real estate market, where overall premiumization in terms of the market over there that is happening as well. Flats that are more expensive are sold more over the years as well. So yes, premiumization in terms of increase increase in the share of flats that are sold more than 1 crore rupees is also a trend in the real estate sector. Similarly, for auto industries as well, the average selling price of cars that are sold above 12.5 lakh rupees is much higher and has gone up versus 2018 it was 10. Now it's become 28% as well. So an increase in terms of the average selling price, that indicates, that the consumer spending power is also seeing an increase coming in. Look at the share of SUVs also. That's also seen an increase coming in as well over the years. In 2020, it was just 34%. Now it's moving in the fast lane and moving to 52% as well. And that's a sharp increase that we've seen in the premiumization trend across sectors.
Thanks very much, Vinny, for highlighting all of those details. In fact, let's move right on then and hear it out from Nilesh Shah, MD and CEO at Envision Capital, as well as Sunil Singhania, founder of Abacus Investment Manager, Asset Managers. They talk about their view on the broader markets.
Typically, the domestic inflows, when they happen, I think the smaller companies or the broader markets do well, which has been the case last 2-3 years. If and when the foreign flows start to become positive, it is possible that large caps during that period might end up doing better. But I think we are constructive on the overall market, be it the large cap, mid cap or small cap.
Is there a bubble? I don't think there's a bubble there. And that's purely because the earnings growth differential still is significantly higher in mid and small caps versus the large cap. So I clearly believe that the mid and the small cap will continue to show better growth. The mid and small caps have certain advantages coming in from the GST reform, the technology adoption, the access to markets, the consumer market. These are some of the advantages that they have got over the last 2, 3, 4 years.
Yeah, the luxury trend that clearly, continues to be at play, just taking a leaf from what Vinny was just highlighting. Chakri, we discussed what's going on within the auto universe, but the likes of a Titan, United Spirits, Nykaa, Havells. I mean, come to think of it, all of them are a play within on the luxury trend that's currently at play. And of course, many out there within the realty segment as well. How is it that you capture on this premiumization trend?
I think the premiumization is basically the higher, wherever there's a higher ticket sale and of something which lasts in value. I'd like to spend a minute in contrasting with, for instance, the QSR. It's a consumption play, but something which is extinguished. And there, the margins pressure is actually very evident. So therefore, I think what's happening is there is a spend happening on items which last a long time, like jewelry, like vehicles. And a certain amount where the Nykaas and all come in while they are consumables, that reflects some kind of an uptrend. So I think the way to play it is through those companies, precisely those, which is some of the jeweler companies, whether it is Titan, Kalyan Jewelers, and through some of the automobile companies, whether it's TVS Motors, Tata Motors, and I think, and maybe Sula. So I think those are the ways to play consumption.
View on TCS with respect to the 17,000 crore rupee buyback, Chakri?
Yeah, I think, the buyback is fairly well articulated. The price, the act, if you're based on the acceptance ratio, and all that, I think it's kind of done its bit. So I think because of the buyback, will we see a significant uptick in the stock? Is unlikely. On the other hand, is the stock kind of fairly valued? Yes. So I think it kind of treads water at current levels.
Okay, that's the take coming in on what's really going on with the market space and, of course, a whole host of stocks as well. There's, of course, Tata Tech. The IPO price band is out, 475 to 500 rupees. So that's going to be something from the Tata stable after almost an 18 years gap last when TCS listed. So that's going to be something which is going to really be the talk. And then Bajaj Finance as well, given that the RBI has directed Bajaj Finance to now stop sanction as well as dispersal of loans under the e-com as well as Insta EMI card schemes via those routes. So that's going to be another stock to look out for. Whether or not there is a knee-jerk reaction, does that knee-jerk dip gets bought into, or do you see a sustained downtick in the stock? That's something that we're going to be looking out for. VST Tillers as well. The company has unveiled 3 new tractors, so that's going to be another segment to look out for. But Chakri, while we did address the whole premiumization trend, what about the rural plays? Do you think they could make a meaningful comeback anytime soon? Although none of the readings seem to be indicating so as of now.
You're absolutely right. None of the readings are showing any marked improvement. There are these specific pockets, which is escorts. Now that's doing fairly well. Of course, M&M is only a part of the whole story of the rural bit. But outside of that, I think the traditional, like, for example, the consumer staples that one would buy, those are, I wouldn't for the simple reason that the valuations are still very high for those, don't reflect the incremental growth from the farm sector, from the rural sector. So from that perspective, I think still stick with urban plays and premium plays, and is the way to invest in consumption, at least the way we are doing it.
Okay, Chakri, great to have you on the show today. Thanks as always for taking the time out and joining in. While we count down to the market pre-open, let's also get in some mid-cap ideas going, considering that space continues to be upbeat. Naresh, anything that you're picking out on?
So that would be a buy on MRPL. We are seeing a strong trend across the board in the space as such. MRPL finally has given a short-term breakout also and has been trending well for the last few months. And it's coming back to the highs made in 2022, wherein it topped out around 120.25. And the stock used to be 140 back in 2017. So it looks like a huge cup and handle formation on the longer term chart. Yesterday, the stock made a new high for the last 3 months. Expecting a move towards 135, stop loss at 112.
All right, let's find out what Kunal has picked out as his top recommendation within the broader markets. Kunal, what's looking good?
So it's on Snowman Logistics. The stock yesterday gave a breakout of a bullish flag and a kind of a combination pattern above 51, 52 mark, closing above those levels. So would be bullish on the stock, expecting this to be a high beta up move for the stock. 20% upside is what I'm expecting, with a target of 65, stop loss at 50.
Okay, so those are the top recommendations coming in from our charters. But let's also bring you up to date with what's happening across the globe in our News Fatafat segment. US President Joe Biden and Chinese President Xi Jinping met in what was their first face-to-face encounter on the sidelines of the APEC summit. The duo pledged to reduce tensions as they agreed to not let conflict and competition harm the top 2 economies. US and China also took a pledge to restore high-level military communication. Meantime, Israel Army is continuing military operations inside Gaza's largest hospital. Israel Defense Forces have claimed to have uncovered weapons and equipment which were being used by Hamas. However, Hamas has rubbished the claims and called the raids on hospitals a war crime.
Meantime, it's day 5 of the rescue operations that's underway at the Uttarkashi tunnel, where 40 laborers are still battling for breath. In the latest, the military operation team has joined the tunnel relief rescue mission. However, with all the challenges and delays, all the workers are reported to be safe, and communication at least has been established. And as temperatures start to dip in Delhi NCR, the pollution level continues to prevail in the very poor to a severe category. No respite in sight, as the AQI is expected to remain the same till the weekend at least. These developments come a day after the Met Department said that a shallow fog-like condition is expected to prevail in Delhi for the next 4 days.